Take a look at the markets. It's actually rock steady above that 7750 mark. So not really given up too much. To be fair, the Indian markets underperformed yesterday, as Rima has been pointing out, when the other markets were marginally in the green, comparable Asian markets. But today, after we saw those severe losses in some of those Asian markets, the Indian markets are not really giving up that much. If you looked at the advanced declines, it's the advancing stocks that have gained the upper hand marginally. So actually, bulls holding the advantage at this point in time, but there is always a danger that the rallies could be sold into. Mid-caps flat, that's the outperforming segment, and the underperforming segment is the bank Nifty, not having a very good day at this point in time. Okay, let's get a market expert, our market master, to tell us how to tackle all these. Gautam Chhaochharia, Head of India Research at UBS Securities, joins us as promised. Morning, Gautam. Thank you very much. Good to have you with us. Well, what's the overall view itself on the Nifty? Do you think it gets well supported at 7,500? Does it get there at all fairly soon because of the negative vibes we are getting from the global spaces?
So we're not so worried about big downtick as such for the market globally as well as for India. But you never know. Obviously, if global emerging markets face a downward pressure, obviously India will also hurt. But in absolute terms, we're not really looking at Indian markets correcting sharply.
Okay. So low probability of the Nifty heading to levels of 7,500. What's the probability that you would assign to the GST bill getting passed in the winter session? And if it does, when do you see the markets breaking out on the upside? And if it doesn't, then would it hurt the markets?
So obviously we've seen progress in terms of political realignment towards getting everyone on board towards GST. Our stance has been that the government even now has the numbers to pass GST in Rajya Sabha. But it's a question of Rajya Sabha functioning, and the government obviously is trying to make sure that even Congress is on board. Our stance also has been and remains that GST is unlikely to be a market catalyst and will not determine the trajectory of the market. It will obviously lead to sentiment for a day or two, but it will not lead markets to drive higher in itself. Markets will be driven more by macro and micro data points rather than reforms or other headlines.
Okay. Well, that's an important point. Gautam, therefore, in anticipation of the GST getting passed, are you already recommending any buys at all?
So our stance has been that around GST, the benefits for macro and micro is a longer-term phenomena. It's a 2-3 year phenomena rather than a 1 year phenomena. In fact, the first year could actually see a lot more turbulence in terms of tax revenues and impact on sectors than what markets are pricing in or looking at. Over the longer term, obviously, the biggest delta from GST implementation, in our view, comes not from sectors where tax rates are effectively higher or lower, because those will likely be competed away and the benefits or impact will be short-term, but will come in sectors where the unorganized sector becomes uncompetitive as they are brought into tax net. Those impact will be much more longer lasting in the form of higher margins or higher market share, possibly a mix of both.
And which are those sectors where that advantage might come? In any case, you're only expecting it over 2 or 3 years.
Yeah, clearly. So the benefits will be flowed over 2-3 years because it takes time to bring in the unorganized into tax net and for it to show up in competition, etc. So they are primarily in the more smaller mid-cap space, in the building materials, ceramics, tiles, some packaged food, etc.
Gautam, your thoughts on ITC after it's almost come to levels of near 300, 310, thereabout, and what should a longer-term investor do?
Can't comment on individual stock, but what we are saying is that you shouldn't jump to conclusions based on the CEA recommendations on GST. One, it's not very clear as to what it encompasses, whether it includes the sin rate, includes both central and state government, or only the central government, or only the VAT. And secondly, this is just one of the reports. Ultimately, the decision will be taken by this GST Council, and the CEA report is just one of the reports. We have seen many other reports over the last couple of years.
Okay. Well, actually, you're making a very interesting and slightly maybe contrarian argument that it's not reforms, whether it is SEB reforms or FDI or land bill, that really affect stock prices, but more really earnings. If that's the macro call, slightly contrarian, I'll have to say, what's the call on earnings itself? Does it take off second half? Does it take off first half of next year, or not even then?
So our view, the earnings recovery will be mild and gradual, and we should see some recovery panning out in the second half of next year, because even in the next 3 to 4 quarters, you will see the pressure of disinflation capping nominal growth being a reality for markets, and we still haven't seen any signs of any fiscal or monetary expansion as such to drive demand up in any meaningful way. So the earnings, they still have downward pressure, and the reason why we have been saying since early in the year that post-budget, the initial phase of honeymoon around the government, reform headlines, etc., will matter less, and focus will be back to macro and micro data points, because you have to remember, all the positives of these reform measures are anyway built into street forecast for earnings and macro. We all are positive on India medium term and longer term, and that positive stance is premised on a lot of these reforms going through, while a lot of these reforms do not affect next 6 to 12 months earnings.
So Gautam, if the market trend is determined by earnings and earnings recovery is not going to take place for another 1 year, will the market upside be capped? And if yes, do you see the markets heading to levels of our previous highs of 9,000, 9,100 in the next 6 to 9 months?
It'll be tough, because it will be sluggish. The recovery will be sluggish. We still don't see any catalyst for recovery in earnings to be very, very sharp, primarily because of the nominal angle, the disinflationary pressures. We have already seen some margin improvement because of commodity prices. Room for that to keep on surprising is actually limited next year. So unless we see government or policymakers taking an expansionary stance on fiscal and monetary, we don't see uptick happening in a hurry. So the recovery will be sluggish. It will be a recovery. Earnings will still grow, and grow possibly faster than where we are right now, but it will still be sluggish.
Okay, what would be the leaders of the rally such as it is? Which sectors would you bet on?
So the sectoral call will become less and less relevant in our view, because we've already seen over the last 6 months the dispersion coming down. In fact, even investors are more closely hugging benchmarks than earlier. It will be much more stock specific. But in terms of our own recommendations, we're still sticking to overweight financials, oil and gas, pharmaceuticals, telecom and media, and underweight on auto two-wheelers, underweight on industrials, infra, power cap goods, and IT services.
Actually, yesterday, our market master made a point that while this year in 2015, mid-caps have outperformed the heavy indices, now mid-caps probably are reaching uncomfortable valuations, and perhaps next year, mid-caps may not be the flavor of the year. Your call?
So I won't disagree with that. So we have mid-caps in a neutral kind of stance at an overall portfolio basis. We won't be pushing mid-caps aggressively as an asset class, but yeah, mid-caps in India is a lot more about individual stocks rather than as an asset class. And we all know that mid-caps have done this year very, very well, also because of the interest from retail investors in local mutual funds who are bigger buyers of these mid-caps. So the answer to that question is more whether flows will continue or not next year.
Okay. Yes, that of course is something we eagerly anticipate. Gautam Chhaochharia, pleasure speaking with you. Thank you very much for joining us with your thoughts on the macros and the micros of the market. As we wind down on Bazaar, we leave the markets in fairly decent shape.